Welcome to the Business English podcast. On today's episode, we have something really special and completely new for you. Something that we are sure is going to tantalize even the most experienced English learning professional. And of course, bring even more value to the Business English podcast community. Now, after many requests from listeners and clients, it is my great pleasure to introduce, drumroll please, the Business Chat series. This series will run alongside normal episode releases, but the Business Chat series is centered on an interview format and is laser focused on professional dialogue exchange. But what does that mean for you? Well, firstly, it allows you to listen in on professional topics of conversation being explored through the use of professional dialogue. Secondly, it will allow you to hear a treasure trove of business English expressions being used in the correct professional context. And we don't stop there. This isn't amateur hour after all. This is the Business English podcast, and we believe one must always over-deliver. So finally, on each episode of the Business Chat series, we will be analysing, extracting and highlighting the key expressions and their meanings so you can get more value out of each and every single episode. This summary of expressions will be located at the end of each episode. Now, we kick off our Business Chat series with the topic of financial education. And just a quick disclaimer here, no one on today's episode is a qualified financial professional, and any thoughts or opinions discussed are solely those of the speaker. The content on today's episode is purely for business English education only. And the topics being discussed is just for conversational purposes. It is not financial advice. For this episode, I will be joined by James. James is a copywriter with considerable experience in the international sales and marketing space, operating everywhere from South Africa to Europe and many, many places in between. He has worked also in a plethora of industries, including offshore finance, tech startups, and health and well-being. A fantastic guest to ignite this new series and get down to the nitty-gritty details of business. Right, on that note, the anticipation is killing me, so let's get started. Ladies and gentlemen, welcome to the Business English podcast, helping professionals communicate more effectively, more confidently, and with impact. With your host, Rob, from Energetic English. Let's get down to business. So, James, welcome to the show. Today, I believe we will be discussing the one and only Rich Dad, Poor Dad by Robert Kiyosaki. Welcome to the show.
Thanks for having me. Really excited to be here. And as you said, it's a seminal book. It's what some refer to as kind of a gateway book. It's one of the first books they read before they maybe go out on their own or decide to change career into something perhaps more lucrative in terms of income. It really reveals an area of education, specifically financial education, that a lot of people, up until they find a book like this, might not have come across before. And that's something that we've spoken just before we've come on about. We really want to dig into some of those concepts. So for your audience listening today, what do you think the biggest thing that they're going to want to know about financial literacy? What is it, and where will it fit within their, what do they want to know about it?
Well, great question. I think that a wider audience will be looking at the terms associated with this financial literacy. I know, many native speakers as well, can get confused between what an asset is, what a liability is. And I know that Robert Kiyosaki does go into a tremendous amount of detail in this book. Like you said, a gateway book in terms of personal financial education. So, yeah, let's look at a couple of the terms that he uses and really, maybe if we've got time at the end, just drop onto that question about why isn't this being taught in
Mm.
schools, in the wider educational space. But
Hmm.
potentially this is a question for another time. But we could just touch on that at the end. So firstly, assets and liabilities and all that crazy stuff. Let's clear that up.
Okay, sounds good. So the assets and the liabilities. This is your as a person, you hold uh, things, okay? And these things in the financial space are called assets or liabilities. You have them marked against your name, all right? And this is called a balance sheet, all right? This is part of the financial literacy and understanding how money moves and how we should be talking about money. And this goes for everyone. If you've got a job, if you're an independent entrepreneur, if you are, searching for a new job, all of these things that we're going to talk about are going to be useful. So, assets and liabilities, what are they and why do we need to know about them? So, firstly, let's talk about an asset. Maybe this is something that you've heard in lots of different areas, but specifically when we're talking about financial vocabulary and financial literacy, an asset is something which produces income. Okay.
Okay.
And income, it could be monthly, it could be yearly, whatever it is, it's something that produces for you or is capable of producing a income over a period of time.
Get that.
Okay.
Okay, so
So for
an asset is
example,
something that gives you money. Okay, so an asset is something that gives you money. So, I mean, is there any? Okay, you're going to give us an example there before
yeah.
I cut you off.
So
But is this like
so
a car then? My car's my asset, or my house is my asset,
okay.
or something like that?
So let's use a car for an example. Is a car an asset? Well, that would depend on how you're using the vehicle and how you have agreed to purchase the vehicle. So
Okay,
let's say your parents gave you the car.
right.
Okay. So in your asset column,
Yeah,
okay, if we imagine we're measuring this and we're doing it properly on a balance sheet, if we have a car, mom and dad said, hey, you've been very good, or we don't need it anymore. They're passing on a car to you, or you've inherited something. It's a car. Now,
right.
you haven't paid anything for that for any kind of duration. There's no agreement in place. There's no loan. There's
Okay,
no
so I've not spent
financing.
any money on that, right?
That's right. Yeah. And that's just
Okay,
to make it simple. All right. For this example. So you have this car, and depending on how you use it, will determine whether it's an asset or liability. Now, with all things, we have entropy, we have the gradual degradation. Okay. And in simpler terms, things tend to go wrong over time. All right.
got it.
And let's use with the car, things are going to fail on that car. So the brakes are going to go, it's going to need a yearly service, it needs topping up with fuel. All of these are expenses that are associated with that asset. And an expense is something that we'll come on to in just a moment.
Right.
But
Okay.
if you are just using the car for driving around, going to see your friends, we're going to town, we're doing all of these activities which do not produce an income, that asset is not an asset. It is, in fact, a liability.
Okay.
And a liability is something that takes money out of your pocket every month or every year.
Okay.
Okay. So let's go over that again, just to make clear. The car, if you use it, for example, for deliveries, right, and you're using that car to drive around and deliver parcels, or you're using that vehicle for a high class limousine service
Okay.
or a chauffeur service, the car is then an asset because
Okay.
it is helping you produce that income. Whereas if you use it just for driving around and you're
Yeah.
paying for fuel, you're paying for all these other costs, then it is a liability because it takes money out without putting anything back in.
Got it.
Okay, so that's what an asset is. And so a liability, similarly, it's just to go over that again, it's something which takes money out of your bank account, or you have to pay for it,
Okay.
and it doesn't give you anything in return.
So what you're saying is that a car to different people could mean different things. So if
That's
I
right.
was given the car free of charge, yeah, I still have to put fuel in it. I still have to insure it. Change the tires. if I'm spending money on this car, it now becomes a liability because it's costing me money. So taking money out, where an asset, if it's, delivering pizzas or delivering packages and parcels, then it's putting money in my pocket. So it then starts to move into that asset column. It becomes an asset if it's producing money for me.
That's correct. And it could be a net result over time. And that is, we can have, it costs money, but it also produces money. And those two numbers, when taken together, that becomes a net result, which can either make it an asset or a liability. So for example, let's just work something through. Let's say that we found a nice vehicle that we like. It's a family car. It's £30,000 and it's got the top of the range things on it. And the monthly debt service or the financing agreement that you have in place says you pay £500 a month for that vehicle. Plus you're paying £200 a month in fuel and some other things that you're paying on a monthly basis. So all in all, maybe you're paying about £800 a month for this vehicle. And this is a medium to high end kind of example here. Yeah. So £800 a month for the vehicle.
Right.
If you are not making with that vehicle at least £800 a month, it is a liability on your balance sheet.
Okay.
All right. So, and it's important to note here that the liability itself is actually the loan agreement or the financing option. That is the liability. So not the car directly.
Yeah.
Right? Although you do have to have these monthly expenses that you pay for.
Yes.
The liability is the loan. Okay. So if you have any loans, any credit cards, any debt or anything like that, that sits in your liabilities column. Those are things which you as a person owe. Okay. They're marked against your name. This is the very easy way to think about it. And these are things marked against your name that you owe.
Okay.
All right. And similarly, in the asset column, if you have loaned somebody money, that goes in your asset column because it's something that other people owe you. It's a form or could generate income over time. Okay. So just to round off that car example, you can see quite quickly, if you're not making £800 a month with the vehicle, then it becomes a liability. But if you've invested in the top of the line, perhaps a luxury car for a luxury concierge, taxi service, essentially, then you can charge higher prices and you're going to cover that debt service quite quickly. And it then becomes an asset for your business organization or an individual kind of setup.
Great. Okay. So what you have here is a real, you've got to make sure that the net result is positive if it's going to be an asset for you. Otherwise it starts to become a liability. And I think it's really getting a clear understanding of, tracking that finance flowing in and out of your pocket, which nicely takes us into the next section of, another concept, should I say, of the book is about this income and expenses idea. Could you just briefly touch on what's going on with these income and expenses? Use the car example because I think that's working really well.
Absolutely.
Income and expenses, very briefly, could you give us some examples?
Great. So income, it's what we all think of. It's the things that, the lump of money or the trickle of money that comes into our bank account on a daily, weekly, monthly, yearly basis. And I say those different time sections because I'm sure there are people listening who are entrepreneurs who will, maybe not get paid for a year and then they will sell a business or something like this and they'll make it in a large amount. All of that comes under income. Okay. So it's the amount of money that enters your bank account thanks to something in your asset column. Let's look at two different examples to highlight this. The first is if I have a job, let's say you're a software developer, you're on $50,000 a year. What is in your asset column? Well, of course, it's the contract that you have with the company. That is what is producing the income. But to use that contract, you have to put your time and skills into that contract, and out comes your income. All right. So you still have that asset. So if you landed the job, you do get something in your asset column, which is the contracts that you have with the company. But to access the income from that, you have to trade your time. A counterexample of that would be if you own a piece of real estate, all right, and it's your name on that housing development or whatever, and that works for you without your time. So you don't have to put time in. Maybe you had to put a chunk of capital in to begin with, or get the agreements in. You put that in to begin with, and that produces your monthly income.
Mm-hmm.
So you've got two examples there. You've got kind of an investor example, real estate investor, and then you've got an employed example.
Yeah.
Notice how both of these things, both of these income options have asset components to them. And an expense, of course, is something that you are paying out for a liability. And not all expenses are liabilities, but all liabilities will incur expenses.
Okay.
All right. So I guess, an expense that wouldn't be part of a liability is, monthly water bill, things like this.
Yeah.
But a car payment, a car, if it's in the liabilities column, then your monthly payments on that, the debt service, will be classed as an expense. And so that's income and expenses. And the really important thing to do is, grab a piece of paper and write down assets, liabilities, income, expenses.
Yeah.
And just have a think through how money is moving through your life. Okay, so what assets do I have? And a really important one, just to note here, is your house is not an asset. Okay, if you are living in the house that you are buying, it's not an asset. You are accruing a portion of capital through you're purchasing the house, but you're still paying the interest on that.
Yeah.
All right. So but if you buy a house and somebody else is living in it, then it becomes an asset if the finances are working. Okay. So just have a look. What are your assets? What do you own that give you money? If it's just your job at the moment, that's good. Part of the business game is to grow your asset column. Okay. That's all part of the fun. And then have a look at your liabilities. What's on your liabilities sheet? What's on the balance sheet here? What's taking money out of your pocket every single month? Could I repurpose that asset? All right. Could I start making money from that and turn it from a liability into an asset? And then what's my income and what are my expenses? So that's kind of a summary of all the key points that, personal finance.
Yeah.
We should be teaching this in schools. And maybe you want to talk about that for a second.
Yeah. I mean, just before moving on, I think it's a really good snapshot that you've given there. I mean, Robert Kiyosaki in his book, Rich Dad Poor Dad. I mean, I don't know of anybody that hasn't read this book in particular circles. Everybody knows about this book or has at least heard of this book. Now, he pioneers this idea that it should be taught in schools, and why isn't it being taught in schools? And maybe some wider controversy around particular questions there. But the idea here is that, brass tacks, everybody should have an understanding of how money flows through their life, what they have as an asset, what they have as a liability, and what is an asset and what is a liability, because they are often miscategorized. Income and expenses, I think, are slightly simpler to identify in some cases, but certainly just sort of debunking the myths, if you will, of those assets and liabilities. And the book Rich Dad Poor Dad goes some way to achieve that. So definitely. So yeah, in answer to your question, it seems to me that it's not widely understood. Certainly it wasn't for me and many people I know, about what is an asset, what is a liability. So why isn't that being taught in schools or at some level? I mean, if we're talking about algebra and maths and trigonometry, and why aren't we learning about taxes and these other things? And I think it's a real challenge to the state education system. I mean, maybe throwing their hands up saying we don't have time, we have to cover so much already. But the argument there is, well, what could be more important than something that you essentially have to execute and deal with on every single day of your life? Some of the largest interactions that you will have be it marriage, be it buying a house, buying a car. I mean, these are huge financial commitments in some cases with marriage. Don't know, but I have some friends that have spent extraordinary amounts of money on this and haven't bought a house instead. So rather interesting. However, the point remains is that to really understand how we interact on a wider or in a
Mm,
wider way with this financial landscape. It's not being sort of trained and educated in schools, and it leaves the question as to why. Why is that happening? I'm not sure that my history lessons on Henry VIII and his six wives have come in, or not very useful really, apart from the pub quiz. How many were beheaded, how many survived, etc. When actually it would have been really nice to know what APR means and a percentage at the end of a credit card, or what does the base rate mean, etc., etc. And certainly in this era of globalization, as the world, the economies of the world start to interact with other economies, I think that the consumer or an employee or an entrepreneur or a businessman or woman is, they need to be at least in line with the base understanding of finance
mm,
and not behind, because um on in the majority of cases that we're on the back foot and we're responding rather than being preemptive in our decision
mm.
making. Any thoughts on that?
Absolutely. So the key thing here is to remember that the state education system has been constructed to produce people which can produce income. And the primary source of income is industry. And since the Industrial Revolution, before that, it was the kind of apprenticeship model where
Yeah,
you would shadow somebody, you would learn their skills, whether it's a turner or a cooper, somebody who makes barrels, any of these kind of hands-on, it's more of a vocational, traditional training. And
yeah,
then you would, once you learned it, you go to the next village and you continue. And when the factories started coming in, Industrial Revolution,
yeah,
now everybody needs to be replaceable. All these people who want jobs and want money, they need to have somewhere to go to exchange what they know or their time for knowledge and then use that knowledge in a job role.
okay,
And at the time of the Industrial Revolution, we need people who are more replaceable, but also there's training that goes along with that. So all of a sudden, you've got this shift from requirement for people who are specialists and are trained in very one-on-one scenarios to a requirement for a workforce that has very low requirement for training, but just almost a production line of people.
yeah,
And to do that, you need to completely change, or you need to invent an education system, because vocationally training, there it's watch me do this, then you will do this,
yeah,
right? But you can't do
like
that
an
for
apprenticeship sort of thing. Yeah,
exactly. It's an apprenticeship. That's what it is.
right,
And when we go to the Industrial Revolution, you very quickly find that you can't train people like that. All right. So all of the jobs that kind of exist at the moment, or 80, let's say 80% of the jobs that exist at the
mm,
moment, they are in these large businesses, or they require these kinds of skill sets. And school, the education system's job is to prepare them for being able to be taught those skills and to function in a production line environment. I know that sounds bad, and I don't want to dive into the controversy here, but that's the reason that the education system produces a person who can function with these skills. It's not in their best interest as the education system to provide in-depth financial training, because once you have been used to produce the income, it's no longer the company's problem. And
right,
remember, the companies had huge influence on the setting up of these education systems. Say,
yeah,
hey, we need people to fill our factories. Can you, look after the children so
yeah,
that we can go to the factories, so that the parents can go to the factories,
got
train
it.
the children. Okay, what should we teach the children? We'll teach them how to be good in factories.
Yeah,
And that doesn't require financial education.
that's
In
interesting.
fact, and this is the point of controversy, in fact, it's better if you don't have a financial education, because then your understanding of the whole financial game is
Mm.
clouded. You don't even have a base to start with.
Mm.
So when somebody comes up and offers you a credit card and say, hey, you can have this now, just pay later, you say, okay, great, that sounds great.
This sounds like a no-brainer.
Because why would you have any, thought as to the contrary? Why would you not believe them? If this is the first point of contact, your parents have credit cards, they seem to be doing okay, but they're actually drowning in debt. It's because these financial products have been produced for a market that is essentially financially illiterate. All right. And it's because of the education system was produced to produce workers, not to produce people who knew how to use money.
Uh-huh.
And as soon as you introduce this model to them, what we've spoken about today, Rob, when you
Yeah.
find, if you just keep it to the assets and liabilities, as soon as you tell somebody, look at your asset column and your liabilities column,
Yeah.
you think, well, hang on, I can have more than one thing in my asset column.
Mm-hmm.
Okay, just that thought is a very dangerous thought for, titans of industry, people who want to keep, you have one job, whereas actually you can have 10 different streams of income, lots of assets, lots of different things like that. So I believe that that's the primary reason. I don't think it's that insidious.
Yeah.
Or that kind of dark
Yes.
reason for
Yeah.
this whole thing. But it's certainly true that a lot of people find themselves in, not even in large amounts of debt, although there are lots of people like that, but just not able to navigate how to plan an expense for a household. For example, if you're going to get married, we need to budget for this.
Yeah.
Where do you have to go to Google because you haven't learned how to manage your money, because the education's job is to teach you how to get money, not what to do once you've got it.
I've got it.
And so, and just to kind of wrap that up, over the next 10, 20 years, what I see is a fragmentation of that mass education system. And what's going to happen is a lot of people will then return to the apprenticeship model. And so now everybody will need to know exactly how money moves through their lives, because as Naval Ravikant, he's one of the investors in Silicon Valley, he famously says that soon when there are 8 billion people on the planet, he hopes there will be 8 billion businesses. So it's that fragmentation of the earning capacity, where instead of going to work for a large business, you instead start your own, or you work with only 10 people. And for that, you must have, before anything else, an understanding of how money moves through systems and how it moves through your life and how it moves through the business. So that's just my. I'm sure there are a few belief statements in there. But
I mean, for me, it sounds very similar to what's being talked about in the wider space. Lots of people in America and the UK as well saying the education system is broken, and in Europe as well. Like, it's not quite fit for purpose anymore. It was great, maybe 50, 70, 100 years ago. But things are moving on, spurred on by technology. And like I said earlier about this era of globalization, people working across borders, what you said about 8 billion different businesses, individuals are going to have at least a foundational understanding of what finance truly is, and for them to really understand how it affects them on a very personal level, which they have, to your point, which they've never had to do before. You turn up at the factory and the HR department or the pay department deals with your finances. Everything is taken away at base. So it's very, very interesting concepts here today. Just leaves me to say thank you ever so much for joining me. It won't be the last time we speak, I'm sure of that. We'll have another one out next week. I think we'll think about a topic in the future. But once again, many thanks for your time, James, and we'll catch up soon.
Brilliant. Thanks so much for having me, Rob.
Cheers. See ya. And now the summary of expressions for the episode on financial education. Seminal. Seminal work is work that strongly influences later developments. Gateway. A gateway product is something which is normally the first experience of something which leads to increased engagement in the future in that particular field. the way money moves through a business. Now, take note of this expression. It is a great way to refer to what happens to money within a business or financial structure, how money moves through a business. To dig into is to investigate or to investigate further. The wider space. Now, this is a great expression to learn. It's used multiple times throughout today's episode, and it means a more objective view of something, incorporating or involving more things. Not a narrow view, but a wider view in the wider space. To touch on something, to briefly talk about something. If you touch on something, you briefly talk about something. To cut someone off, to interrupt someone. I cut James off a number of times during today's episode, so sorry for cutting him off. To interrupt someone. To pass on something, for example, in today's episode, to pass on something like a car is to give or donate something to someone, especially to a friend or family member, to pass on something. To put money in your pocket. If something puts money in your pocket, it earns you money. It's a really good expression to learn. To put money in your pocket. Top of the range. Top of the range means best in class. It is the very best within a particular field. Top of the range. Similarly, an expression that was used a lot during this episode. Similarly, along the same line or along the same vein. These are all great expressions when expressing similar thoughts, concepts, and ideas. Along the same line, along the same vein, and similarly. To take money out of your pocket. To take money out of your pocket is something that costs you money. If something is taking money out of your pocket, it is costing you money. Brass tacks. Brass tacks are the basics of something. You're not sugar-coating it, if you know that expression. If you get down to brass tacks in a subject, you're talking about the basics without sugar-coating any of the detail. To throw one's hands up. To throw one's hands up is to be outraged, to complain or to dispute. You throw your hands up in protest. To be outraged, to complain or dispute something. To be on the back foot is to be in a position of disadvantage. If you are on the back foot, you are in a position of disadvantage. To dive into is to go into more detail. If you dive into something, you are going to go into more detail with it. Controversy. Controversy is a heated discussion. We all want to avoid controversy. To be in one's best interests. It's a very good expression. Now, this means a thing that you would do that would probably be beneficial to you in some way. To be in your best interests or to be in one's best interests is a thing that would probably be beneficial to you in some way. To have a clouded understanding of something. If you have a clouded understanding of something, you have an unclear understanding of it. To have a clouded understanding. No-brainer. A no-brainer is a decision you don't need to think about. It's a no-brainer. The contrary. The contrary is the opposite. It's a great business expression to know, used a lot in the personal space. The contrary is the opposite. To drown in debt. That's a really sort of a visual expression here. To drown in debt means to be in a lot of debt. Barely surviving, some may say. Financially illiterate. If you are financially illiterate, you do not have a good understanding of basic personal finance. Titans of industry. Titans of industry are the main players in a particular space. Insidious. Insidious. Even the sound of the word is evil. Insidious is something that moves fairly slowly, a concept, an idea, a plague even. It's something that moves slowly but has disastrous effects. Okay, insidious. To wrap up something is to bring something to a close. So to wrap up a meeting, for example. Fragmentation is to break into smaller or different parts. You take something large and you fragment it into different parts. To be fit for purpose, if something is fit for purpose, it is useful. And finally, to be spurred on. To be spurred on by something means that you are encouraged by something. To be spurred on. And that concludes the summary of expressions for financial education. You have been listening to the Business English Podcast. Remember to subscribe, leave a review, and we'll see you next time.